Just last week, we talked about Equentis Solar Holdings, and now there's another renewable energy company about to hit the market, which is NTPC Green Energy or NGEL. Now let's break down what this IPO is all about. Now, NTPC Green Energy is a huge player in India's energy sector. It started as a part of NTPC Limited, but was later set up as a separate company focusing entirely on renewable energy. Now, all of NTPC's renewable energy projects are managed by this 100% subsidiary, helping them focus more on growth and get the funding they need. Now, NTPC Green Energy focuses on big solar and wind energy projects across India, working with both government companies and private businesses to provide clean energy. Now, as of September 2024, they had deals with 17 customers for a total of 42 projects. 41 of those are solar and 1 is wind. Now, their total energy capacity is massive, which is around 26,000 megawatts. This includes about 3,320 megawatts from projects that are already up and running, about 13,500 megawatts from projects they've already won contracts for and are building, and around 9,100 megawatts of future projects that are still in the planning stages. Now, coming to market opportunity. Now, India's power demand is expected to grow by 5.5% over the next 5 years. The renewable energy sector is booming, and there's a huge opportunity in this space. India's renewable energy capacity has reached about 200 gigawatts. That's a huge leap from just 63 gigawatt in 2012. Now, solar energy has been the major driver here. Now, looking ahead, India is aiming to get 40% of its electricity from non-fossil fuels by 2030, with a goal of 450 gigawatts of renewable energy capacity. Now, this creates a big opportunity for companies in the renewable energy space to expand and grow. Now, coming to financials. Now, the company shows impressive revenue growth with a 47% CAGR over the last 3 years and a strong EBITDA growth of 48%. Now, although revenue increased significantly in fiscal year 24, in the first half of the fiscal year 25, it only grew about 7%. Now, PAT also grew at a CAGR of 91% over the last 3 years. Now, the debt to equity ratio decreased from fiscal year 22 to fiscal year 23, but rose slightly in fiscal year 24. Now, return metrics like return on assets, return on capital employed, and return on equity are all modest. Now, coming to competition and valuation. Now, NTPC Green Energy faces stiff competition in the renewable energy sector. Its major listed competitors include Adani Green Energy and Renewable. Now, NTPC is the smallest in terms of revenue compared to its peers. Despite being smaller, NTPC has a higher profit margin of about 17.56%, which is much better than Adani Green and Renewable. Now, NTPC price to earnings ratio is lower than Adani Green but higher than Renew Energy. Now, let's talk about strengths and weaknesses. Now, here are some reasons why NTPC Green Energy is in a strong position. Now, the renewable energy sector in India is booming, with the country's ambitious target to reach 450 gigawatts of renewable energy capacity by 2030. NTPC is well positioned to take advantage of this growth, especially with its experience in large-scale solar and wind projects. Now, as a wholly owned subsidiary of NTPC, one of India's top public sector companies, NTPC Green Energy benefits from NTPC's experience, financial strength, and brand reputation. Now, this gives it a lot of support and also credibility. Now, the company has a large project portfolio of around 26,000 megawatts of renewable energy capacity. This gives NTPC a strong foothold in the market. Now, thanks to NTPC's strong credit rating and financial stability, NTPC Green Energy can access capital at a lower cost. Additionally, the company's operational efficiency and high capacity utilization helps keep costs low, making it financially resilient. Now, coming to weaknesses. Now, a huge chunk of NTPC Green's revenue, about 87% in fiscal year 24, comes from its top 5 customers. Now, the biggest customer alone accounts for about 50% of its revenue. This means that if anything goes wrong with these customers, it could affect the company's revenue stability. Now, although NTPC Green Energy has projects across India, around 62% of its operational capacity is concentrated in Rajasthan. If there are any disruption in this region, like extreme weather or change in policies, it could affect the company's operation. Now, NTPC faces stiff competition from bigger players like Adani Green Energy and Renew Power, which are already well established. While NTPC Green is competitive in profitability, it still has lower revenue compared to its peers. Now coming to the IPO details. Now NTPC Green is set to open for subscription on November 19th and will close on November 22. The price band is in the range of rupees 102 to 108 per share. Now the IPO consists entirely of fresh issue shares. There's no offer for sale component, meaning no existing shareholders are selling their stakes here. This is all about raising new funds for the business. Now the company plans to use rupees 10,000 crore from the net proceeds of this fresh issue specifically to repay debt that's currently on the books of its subsidiary NTPC Renewable Energy. The remaining funds will be used for general corporate purposes. Now, how do you like this company? Do let us know in the comment section. And having said that, it's me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.